Hello everybody, hope that you are doing very well and welcome to this evening Contenders live stream. Hope that you are very well. Well, we've got quite a lot to go through tonight. This is going to be the order of proceedings. Going to be starting with link chart of the week, okay, which is a pretty interesting setup, so I think you'll enjoy. So link chart of the week, and then going on to Fibonacci, using some new algorithmic bots levels that seem to be working really well on specifically on smaller market cap coins, altcoins I'm referring to here. So yeah, that's going to be the bulk of today, and then moving on to which pivots to pull from. And this is because one of the things that I noticed a lot, obviously, there's a lot of questions that come in the champions chat throughout the day, to be honest. And one of the questions I see the most, or not necessarily questions as such, but people, when I'm looking at charts people post, I see a lot of different Fibonacci pulls than where I would pull from. Thus, I wanted to add in on tonight's live stream about how we can identify possibly better levels to be pulling from. Obviously, everybody knows the standard high to low, okay? And then I'll be giving you some tips on ways that I would specifically be looking to pull from, because it's not always just going to be the standard highs to lows, and a little bit more in-depth is what I want to go through as well today. So yeah, basically going through the new Fibonacci algorithm script, and then moving on to selecting the pivots. Okay, and just so you're aware, there's only going to be 2 live streams left of Fibs. Obviously we got next week and then the week after. The 2 that I have left that I want to cover. Okay, I do want to cover harmonics, just do all the harmonics in one video. I have done harmonics in the past, but I would just like to cover them all in one video because I don't see enough people using them. And I think I can do another updated stream on harmonics. So I want to do harmonics, and then I also want to cover some of the GAN Fibonacci levels that he used, or not necessarily Fibonacci, but it falls under the same tool, obviously using the fib. So I want to cover the GAN theory. Harmonics are the 2 live streams left. So we've got 2 left. Actually 3, because I want to do Fibonacci time. I do want to cover Fibonacci time, actually. So yeah, we got 3: harmonics, a bit of GAN theory, and Fibonacci time. And then it will be the end of the Fibonacci series. Yeah, it's obviously, I think it's been pretty decent so far. But yeah, 3 streams left then: harmonics, GAN, and Fibonacci time. So yeah, I also want to start. Actually, before I start, I'll mention this about Vimeo. Now, I'll mention it at the end. I'll go over that at the end because obviously there has been some changes. Let me do it now very briefly. Okay, I just want to change of mind. Yeah, I'll do that at the end. Okay, it's not too important. I'll save it for the end. Okay, so that's what we're going to be going over tonight. I hope that you thoroughly enjoyed tonight's live stream. Make sure everybody can hear me. All good, very good. Thank you very much. And yeah, without further ado, then let's begin tonight. Okay, so link chart of the week. This. I'm going to talk you through the setup, and then I'll explain how the trade went for me, by the way, which I'm sure you might find amusing. But yeah, this was the setup I was looking at yesterday. Think back to yesterday. If you cannot remember yesterday, I don't know. But yesterday, obviously, Bitcoin had its move, and all of the altcoins, I'm talking all of the altcoins yesterday, were about 10% down. So you were seeing, Seller 10% down, Engine 10%, and literally all the altcoins pretty much were all minus 10%. Okay, so it was a sea of red. Okay, and the one altcoin, or from my alt list that I follow, the one altcoin that was showing strength was Link. Okay, so Link was actually up 10% on the day, while every other altcoin was down 10%. Okay, so obviously I made it clear I wasn't actually interested in all of the alts, and Link was literally the only one I had interest in, because it was the only coin in the space, well, on my watch list, I suppose, that was actually positive and green and moving upwards. Okay, you can see that it carries on moving upwards here. So let me go over to what I was looking at. Okay, so what we actually have is from a Fibonacci pull from low up to the high of the time. Okay, I've got the 382. I'll load up the chart in a second, but basically you had the confluence of a pullback onto the monthly level, which, as you can see, is also bit of a support resistance level. Ultimately, recently, resistance, 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 resistance. You know, if we can get the pullback into that monthly, which is also the confluence of from the low up to the high, a 382. Okay, so you got the 382 Fibonacci level in confluence with the monthly, pretty much on top of each other. Okay, so I'm looking here at an entry for me of 29609 sats. Okay, so long entry from 29609. Day trade long, so very short term. Okay, literally I'd only do it for the day of 382 Fibonacci confluence with the monthly. Okay, Link, the only strong altcoin, well, I guess yesterday now, in a sea of red alts. Okay, so Link is up 10%, while basically everything else is down 10%, and this is what's known as like buying with strength for continuation. Okay, so this is the thing that some people will be just think of. The best example of this is Engine Coin, or obviously Matic had a massive move down, but you know Matic did move up 300% as well. And it's like, you know, if you see something that's up 10% on the day, if there's no reason for it to turn around, okay, if you see. So I guess the best example for me is Ravencoin. When I trade, this is a very similar setup of what I day traded Ravencoin. This must have been about a week ago. Raven was in a really, really similar position where it come up to the high, missed monthly. Ravencoin also missed monthly by about 20-30 sats. Okay, and there was still about 8% up to the monthly level after the retracement. Okay, very similar here. That this is like, well, it's just like very likely to push up to the monthly. Obviously, there's no guarantees. I don't want to say it's 100%, but it's very likely that you could get continuation to touch these monthly levels. And just think back to the Raven setup that I went through. Well, I think it must have been about 2 weeks ago, 2 weeks ago, where I day traded that Raven long, where it was already up 10% on the day, but it was just for that extra push up to touch the monthly, you know, before you ultimately see how it reaction of the level, I guess. But very similar situation on this. Just because something has moved up, it doesn't mean you have to not trade it, okay? Because, you know, some people are going to see a coin move up and then think, you know, I'm not buying when it's already, you know, when it's up 10% on the day, I've missed the trade. Where obviously I'm in agreement, I wouldn't be market buying the top, but if we can get the retracement, okay, then that's absolutely fine to take. You know, you can't be, there's nothing wrong, or there's no reason to be scared of taking a coin that's up 10%, for example, on the day. You know, if you get on that retracement, then it's clearly got strength. And as long as you're not coming off of a major resistance level, then one would expect continuation, you know. So yeah, that's basically the trade. Stop loss 2 higher lows back. Take profit 1 the monthly level. Close out at the weekly. Okay, and this is the outcome. And this was a little bit of an annoying trade for me because I literally nailed the entry by 1 sat, and it did come up and hit take profit 1 of the monthly, and now we're actually hovering back around in the center here. So it would have been a profitable trade, but unfortunately I missed it by 1 sat. So yesterday in the end I traded no altcoins. I literally just didn't take any altcoin trades yesterday, but this was the one I was interested in, and I missed my entry literally by 1 sat. Okay, so you know, I was looking for 29609, okay, and the low here was 29610. Okay, 6010. So I literally missed it by 1 sat. So it was extremely frustrating because then I didn't actually trade it then for the rest of the day. Could have obviously got it on that pullback in hindsight, but you know, for me, I missed the trade, and yeah, it did move up at what, about 7% ish. 7.5% up to the monthly, where it would have been my take profit 1 and return. And it was totally my own fault. If I'm honest, it was totally my own fault I missed this trade because generally when I'm trading, yeah, so I obviously have a I guess this is a bit personal to me, but for those interested, of, you know, when I'm day trading, I like to split. Obviously I can't go 100% into one coin because when I'm day trading, you know, for example today, if you look at the altcoins, I'm just going to really quickly give you a insight into my brain. So for example, in today's trading updates, I give 1, 2, 3, 4, 5, 6, 7, 8 coins with like pretty decent setups for scalp trading. Okay, so little ins and outs, in for 1%, out for 1%, in for 1%, out for 1%, like quick day trades, but I obviously get, for instance today we had my eyes on several altcoins. Okay, so when I have my eyes on several altcoins, obviously I'm splitting up my stack into different sections. But because yesterday I was literally only interested in this one coin and nothing else. I put onto, so I had a buy wall. I literally just put in 14 Bitcoin onto Link, and in hindsight, in retrospect, that was clearly a bad decision because it is basically created a like a buy wall. Okay, so by me putting it at literally one sat below, annoyingly, it's totally my own fault. I should have split up my orders, and just lazy by me, really, really, really poor and lazy by myself. But yeah, I did create that buy wall, which I'm maybe someone will find humorous. You can see here up on the top left, the low was literally one sat above me, one sat, and that is like 0.0001 when it comes to Link. But yeah, literally must have been my buy wall holding that up, and this did move up 7.5% after I put up that. I didn't even want to create a wall. It was nothing to try and psychologically do it, but yeah, just really, really poor by myself. And as I made a note of it, it was really, really poor for myself because that's the second time I've done this recently. What was the other coin that I done it on last week? Well, I just put it on one coin and I missed it. Another really low sat, well, actually medium sat, but missed it by one sat again, and it's because really lazy with the position sizes where I should cut it down. But yeah, that was really, really bad for myself actually. Very frustrating because it did move up 7.5%. If I actually not being lazy with my position sizes, yeah, I would have actually nailed that trade. And you can actually see, I'll show you another nice area of confluence that I was looking at it at the time as well. You actually have the negative 618 Fibonacci. So again, from high down to the first low. Okay, you can see here from high to low you had the negative 618, but then when we move it down one pivot here, okay, from high down to the low, you hit the 6.6 to the exact sat. You see how you're hitting the 6.6, and this is one of the ones that I love to trade Link on. So as you all know, my favorites, one of my favorite coins to trade is Link because of this 6.6 level is outstanding. It's really, really outstanding. You can see from here from high to low, hitting the 6.6 to the sat, and again you had the negative 618 here. So in hindsight, I should have actually laddered into this. So an order at the monthly, maybe front run to 382, and then another order on the 618, and obviously I would have got two orders filled, or just iceberg the order, for example, or just split it up into much smaller segments. Nevertheless, I didn't do any of that. I was lazy and I missed the trade. A bit annoying, but what can be done? I done decent, made up for it trading Bitcoin, I guess. So yeah, one of those things. Still was up on the day. And that's the important thing, I guess. So yeah, that was Link chart of the week. I hope you can see my insights of what I was trading there. The confluence was really, really, really nice. I do think the confluence was nice for this trade. Okay, and I hope that this has been helpful for you. Just that is really nice. Obviously, it didn't hit the negative number in the end, but if you move it up one pivot, high, low, 6.6 again, and coming down to it did hit that monthly negative 618. In hindsight, I should have bought the monthly, but I didn't. So what can I do? But yeah, I think this was a nice trade, and it's also nice to let you know that I'm sure you'll know this, I don't need to say, but just because something is moving up on the day, you cannot be scared sort of to buy in, because some people are going to see this is up 15% in a few days or so, and be like, well, I'm not buying in on this because it's already moved up too much. But if you can get in on these retracements on strong SR levels, remember this was a strong resistance support, it's definitely worth getting in for. That's a 7.5% move. That's a lot of that's a lot of money that can be made off of that move. And obviously now it's coming down in what I would say a little bit of a channel. Actually, looks like we can put this on it. Yeah, and coming maybe we get another attempt at a monthly very shortly. Yeah, I will cover Bitcoin at the end for you, by the way, because yeah, Bitcoin for me is quite in an interesting position. All I would say is I wouldn't have a tight stop loss at the moment, because I do think we're going to get a stop hunt. But yeah, I'll cover Bitcoin at the end for everyone. The market front run down. Yeah, yeah, sometimes happens. Yeah, and this is the thing. In my opinion, Link is not a low market cap coin, and you should. I guess 14 Bitcoin is a little bit too much. It was really bad for me, but nevertheless, on these sort of coin, if I'm trading ETH, Bitcoin, then you can do that really easily and get filled. But yeah, no, when trading these altcoins, one has to take more care. How are you trade coins with ENG with such position size? Yeah, you have to. If you're trading Enigma, you have to, because this coin gets, sometimes you're on 50 Bitcoin daily volume. So if you try, that's obvious, I guess. Like the volume that goes through Link is like times 10, times 100 sometimes. The size that goes through Enigma coin. So if trading Enigma, yeah, you have to like iceberg. You just have to use a different tactic of getting filled, and you have to not show position sizes, because otherwise 100% you will create a wall, and the bots are going to work off of this. Obviously though, this is the advantage. Okay, so a little bit off topic, I guess, but I can discuss it. This isn't something that I do a lot of. I want to say I don't do it. Like, I want to say that I don't do it because obviously, this is highly frowned upon / illegal in things like the stock market of spoofing orders. You just aren't allowed to really do it. So I'm not going to say I do this, by the way. But one tactic, I guess, if you do have a substantial amount of Bitcoin, then what you can do is spoof orders. So let's say, for example, I wanted to buy Engine coin or Enigma coin. Okay, so let's say I wanted to buy Enigma coin, which is a very low sat coin. Let's say let's say I'm already bought in. Let's say I'm already in a position, really off topic here, but let's go for the example. Let's say I'm in this coin. Okay, and I'm already in this coin, but I want to lower the price and essentially build a bigger long position. Okay, so this was something. I'll go back to the example when this was like on fire. Okay, it was around here where we had this like really, I can't remember the exact date, but it was earlier this year. It would have been it was around here. Pretty sure it was around here where we had this like really nice range. I've removed some of the levels because they've obviously became old, but we were going from high to low. It was just the most perfect range on Enigma coin. It must have been earlier this year. It might have been a little bit later, but nevertheless, it's kind of irrelevant. What I want to say here is, let's say, for example, I'm trading the range. Okay, and I want to keep buying the lows. Okay, so I want to buy the low, buy the low, buy the low, buy the low, buy the low. Okay, and essentially accumulate a position. You want to accumulate a position. So one tactic that people can do with larger amounts is, let's say they've bought the low the first time and then it's got its rise. Okay, you can take profits. Okay, you're not going to be holding it the whole time during accumulation, or generally not the whole position. You can take profits, and then when you add low, take a percentage of profits, come back down to the low, take a percentage, come back to the low. How can you force this down? Well, let's say the price is sat at 8,800 sats, okay, and or somebody puts in like a sell wall of that they don't want to actually sell. So let's say that we're holding, say, 20 Bitcoin of Enigma coin, okay, and then we put in we don't want to sell all of this, okay, because we're accumulating a position. But let's say we put in a sell wall for 19 Bitcoin. People are going to see the 19 Bitcoin sell wall and think, oh my god, somebody wants to sell. Let's sell out of this, because clearly people are going to be like, a whale is trying to sell, something's going wrong, I need to get out of this, get this coin. Okay, and then people are going to be selling that, seeing the sell wall there with no intentions. If the price rises, you will cancel the order. Obviously, if someone market buys, then it's going to hit your order, which would be unfortunate, but you'd be in profits, so it's not the end of the world. But obviously, if you have an algorithmic program that would obviously see the rise and automatically cancel, then you're ahead of the game if you trade with bots. But yeah, obviously you have no intentions to sell, but people are going to see the sell wall, they're going to be scared, they're going to sell out, and all it is to lower the price down to where you want to accumulate price again. Okay, so you'd have to sell walls out, people are going to sell, and they're going to, their sells, they're going to be selling into your buy orders, so then you can accumulate more at the range lows. Okay, so yeah, that's a really good tactic for people that like to spoof. Again, it's pretty frowned upon, so I don't do it, but it's a good tactic. Well, arguably a good tactic, yeah. So yeah, that's one way on these low sat coins that you really can like force price down essentially. But yeah, really off topic now. I wasn't planning to discuss anything about this, but yeah, pretty interesting, I guess, nevertheless. Right, so what I wanted to go over today was, Fibonacci levels. Let me just take a really quick drink. Cool. Right, so, so welcome, everybody. Let's go through some, for me, extremely interesting, and I just filled at this tonight really happy, Because I have the most perfect example. Because the coin that I've been now trading, I've been doing this for about 2 weeks following Waves. Okay, so Waves is a low sat altcoin. Let me load up the slide. Okay, so yeah, the majority. Let me read through the slides first, and then I'll explain the most perfect example ever. So the majority of bot algorithms work off of Fibonacci. Okay, so Fibonacci. Why would bots use Fibonacci? Let's go through this question first. Okay, because it can have a programmed entry and exit and stop loss. Okay, so if you work with fibs, okay, you can have your bot every single time, for example, buying the 0.5 Fibonacci level. Okay, buy the 0.5 Fibonacci level and sell the negative 0.618 Fibonacci level. Okay, so your bot would be programmed to buy every single 0.5 Fibonacci. Let's say stop loss always just set hard stop loss below the 786. Okay, and if this bot is taking thousands of trades a day across all different altcoins, etc, 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 it's just a programmable stat that a bot can have. Okay, and you obviously a bot needs a hard system. You can't have sometimes this, sometimes that, like a human can do, sometimes taking the trade, sometimes not, or different soft rules. Let's say a bot is obviously needs to be programmable. It cannot switch and change its mind and here and there. Okay, so obviously Fibonacci is absolutely perfect for this. Yeah, it is. But what you will see with many Fibonacci, because I've been speaking recently with people that do programming. Myself, I don't program bots, so this is not something I do myself. But I have been speaking with people programming bots because I'm interested in actually getting a bot made. Just something, I guess, for a little bit of fun for myself, and possibly then can give out to the group, I guess, or whatever. But nevertheless, yeah, I am interested in building a really, really top bot. But nevertheless, that's again off topic. But what you will see is a filter that's put along with the Fibonacci. Okay, so what the filter would be is, for example, you'd have to see, let's say that if you're along my brain, then the 26, 55, 200 EMAs that I really like to use when scalping, you'd need to see certain crossovers, and if the crossover is not there with the fibs, then it will not be taken. And again, you'll know I use the percentage change alert. You'd also want to see, for example, the bot is only, the bot would be programmed to say yes or no depending on percentage change of how fast does it drop into this level. That's another thing that you can add on. But it's all I want to say is it's programmed around Fibonacci. That's the base of it. Okay, so when we know that, okay, if we can work out what Fibonacci levels the bots have been buying and selling in the past, then we can trade alongside the bots. And this is, I want to highlight specifically for me, that I've been doing this testing on recently, is on low sat market coins. Why low sat market coins? Because or low market cap coins, because these low market cap coins are not really traded by the general public day in, day out. You're not going to see people on Waves. I've got today examples from Waves, Basic Attention Token, which is obviously quite big, but Basic Attention Token, Icon, Link as well. I actually have an example on Link. So some of these are not the smallest, but coins like Waves, for example. Waves is, I don't think you're going to find many people that trade it. And you can tell 100% when bots are trading something, because of the orders flashing in, flashing out. You can just tell. So for example, you go to Waves order book now, and you see it's controlled by bots. So when we know, for example, on Waves, which I have the most perfect example from, is controlled by bots. If we can work out the algorithm, the algorithmic bot that's working on this coin, where it's buying, where it's selling, where it's buying, where it's selling, where it's buying, where it's selling, if we can see what's being controlled on that particular coin, well, then we can trade along with the bot. Okay, I want to stress there's no 100% guarantee in this. There's no 100% in trading, is there? But if we can work out what it's done in the past, then we have a good chance of working out what we could do in the future. Okay, of trading alongside it. I want to say that it's much better on lower cap coins, because obviously on the higher cap coins, if you try and do this on Ethereum, well, there are going to be human traders, let's just say more human traders than bots. So harder to view the footprint, although you can 100% still do this on higher market cap coins. You can, but it's a little bit harder because you're not going to see as maybe not as clean levels. But it's just want to say it's easier on lower market cap coins. Let's just say that. Okay, so yeah, this was actually, because I'm not a bot trader, you can go follow Ballage on Twitter. He's helped me with this, and he's a pretty good altcoin trader, to be fair. So if you're interested, you can follow him on Twitter. He has been helping with me. He deserves a shout out. So yeah, he is the one that basically showed me these 0.5 fib levels, gave me examples from some of the work that he's done, and then I've just essentially he's really has helped me with this, of like bringing my mind to the 0.5 fibs, because I had never used these before. So this is for me now, been doing this for about 3 months more or less, in specifically OD in crypto, and so it's relatively new to me. Just so I'll be very transparent, I've not been using this for years like I have Fibonacci itself as a core, but these levels I found testing it now for 3 months are very nice. So I felt today was I just felt it was a good opportunity to share you. I just don't want to take credit for it. Okay, that's the thing. I don't want to take credit for this like some of the other work that I've done. This was not founded from myself. Okay, and moving on, and I have been testing it myself though, yes, and it works very well under low stack coins. Today I have some examples of coins I've traded using this method. So moving on to some of the levels that you'll need. So 0, 0.5, 1, -1, -2, -3. Well, basically, if this was in order, isn't it? So basically 0, 0.5, -1, -1.5, -2, -2.5, -3, -3.5, -4, -4.5, -5. You could go on, and you can add on the expansion. So you could go 0, 1, 1.5, 2, 2, 2.5, 3, 3.5. So the negative levels and the plus expansion levels at the same time. Okay, so yeah, just let me do that one question. Market manipulation. Yeah, definitely not an advocate of market manipulation. Just to be like really thing. A bot would be incredible. Yeah, I'm really interested in a bot. I really want to get a bot built, partly because the way I trade is pretty off of hard rules. So if I can get a bot to trade how I think, then I could essentially I love trading, so I wouldn't stop trading. But if I can have something, essentially just bringing in some passive income, I'm not going to complain, to be honest with you. So yeah, I'm very interested in getting that bot set up, and that will be like my personal challenge, I guess, of 2020. So yeah, the 0.5 Fibonacci levels. So those are the levels that you want to do. And again, this is very much finding the trend. Okay, so finding the trend historically, seeing the pivots that it's used, and then continuing on with this. Okay. And I've got some examples for you today, but I really recommend you go out and try this on some of your favorite low stack coins, and I think you'll be pretty amazed. This algorithm does seem to be pretty big in some of these in the lower, specifically the lower market cap coins. Okay, so yeah, here we go. So basically what we're looking for here, so as a little bit of the same here, but as mentioned, the majority work off fibs. Here we can work out what the algo / bot is working with at the 0.5 Fibonacci levels. As each touch thus far, there has been a support and resistance bounces. If we can work out the main algo that is in work on these smaller market cap altcoins, then we can trade alongside with the bots and its moves. We would like to do this as primarily it is bots trading during the trading the day. Okay, so moving on, as you can see here, so this is waves. So I absolutely love this example. Oh, it just feels really good when a few weeks of work pays off, basically. So what we can see here starts with the, you can see the 1 and the 0 are obviously the pivots that I've taken. So from the high down to the low. So high to low, this is where it gets interesting, when it gets the reaction off the 0.5. So I haven't wrote this in the slide, but let me make this clear. When you've gone from 1 to 0, okay, so high to low, or low to high, if you're going the other way. But here, from high to low, you need to see the reaction at the 0.5. That is obviously your indication that it's going on here. Obviously you can see a little breakthrough, a break above through closes, but you want to see the reactions around this level to show that the bot is participating in the 0.5. For example, you don't want it to be going up, well, definitely not going up above the highs, but not even really up to the 618 level, the 786 levels. You want to see it contained around the 0.5, ideally, okay? But then really when it gets confirmed is when you come down and you see the reactions of the, the later levels. So you can see here from high to low to 0.5 to the 0.5 here, and then from reactions again here you get little breaks through, a little double bottom as you can see, but then another move back up to the 0.5, down to the -1, up to the 0.5, ultimately coming down to the 1.5. okay, and so this is the price action from 1150 sats, again on waves, 1150 sats to 769. And this is a zoomed in view. Okay, so this is one section. Okay, so one section of in here, okay, on a smaller time frame, of how it's even controlling the smaller time frame moves, which I just find amazing. So this is basically, to fully understand what I'm saying here, this has gone on over a period of a few weeks. Okay, and then within that, in the smaller term time frame, we're also getting the, you know, the bot getting all the micro ticks as well. So the micro tick scalping in the day is making up the bigger work that it's doing. I just find it so amazingly interesting. As you can see, this is a different chart than this, but it's a zoomed in view of more day trading. Not so much day trading, but just a zoomed in view of one section of this downwards move. Okay, it's still going from high to low to 0.5 to the lows. Oh, sorry, this is the one I wanted to show you. Apologies there, that was that one. This is the zoomed in view. Okay, and you can see from high to low to the 0.5 to the -5 to the high to the low to the high to the low to the high to the low to a break. Okay, one thing I want to mention here. Okay, so, sorry, I think I need to slow down a little bit. I'm a little bit excited. That's the reason why, because this for me is, you know, I've only been doing this strategy for about 3 months, so this is relatively new for me. So it's pretty exciting, I think. Anyway, yeah, you can see here, one thing that I need to note, because it's happening quite a lot, is that, let's say for example here we get tested the one like 3 times. You have to acknowledge that if, you know, there's obviously a bot buying this level. Okay, so when the bot has depleted its buying, okay, it's going to fall through the level. Just be really aware of that. So if we start seeing the level tested more than once, you're going to expect the break. Okay, so 1 touch, 2 touch, generally on the 3rd touch is when it breaks. Let me tell you this. So the 3rd touch, you're generally expecting the break. You can see 1 touch bounce, 2 touches bounce, 3rd touch weak, fall through. The same on the flip side. Touch, bounce 1, touch, bounce 2, touch 3rd time through, doesn't actually come up to the level itself, a little bit of a partial rise. Nevertheless, it's the 2 touches. So low, high, low, high, low, high, low, already touched 3 times, breaking straight through. Okay, let me highlight this section here, because this for me was very interesting. What we would be expecting is from here back up to here, wouldn't we? But because there are going to be humans that have participated in this area, where are their stops going to be? Their stops are going to be below the series of lows. Okay, obviously when you get this candle through, you take all the stops, and in my opinion this is why you get such a break to the downside, skipping the 1.5 and going straight to the -2. Because of all the stops that are located here, you take them all out together and you get a stronger reaction to the downside. Okay, and then obviously from the -2 back up, partial rise, back up, -1, number 1, 0.5, again breaking harshly down through. Okay, so then this was now yesterday, so still tracking it yesterday, and so this was the 9th of December, 40 minutes left on the clock. As we can see here, I'm going to ask you what happens next. Okay, so what happens next? I've said you've touched this level now once, twice, 3 times, 4 times on support. Okay, so from low to high. If we're envisaging this to go down and continue the pattern of low to high, okay, getting rejected at the 0.5, what are you expecting next? Okay, hopefully it's quite, I hope you might find this obvious. Are you expecting this low of the -2 to hold? Think of that for a second. Touched once, touched twice, touched 3 times, touched 4 times. A lot of support found here. Okay, but nevertheless, do you think this is now exhausted support and there's going to be any more buyers left at this level? Think about it for 1 second. Okay, I hope the answer was no. Because price does break through here and it doesn't find any support at the -2. And let me show you what happens. We come down, absolutely perfect example, made me very happy. What we do is we come down and we touch the -2. Okay, so you get no support obviously on this touch. You go straight through, straight blast through the level. You touch the -2. Let me actually load up the chart right now. Okay, so let me load up the chart and we can go over onto it, waves. Okay, so we touch the -2 by nothing else other than the exact sat. The exact sat. Let's put this on the daily time frame because that's beautiful, isn't it? The exact sat touched it to the low. Okay, from that exact touch to the low, you can see we're getting a rejection here. But nevertheless, from the exact touch of the low, it took off, absolutely took off today, as you can see here. Okay, let's just hide everything. As you can see here, absolutely took off from the -2.5 low. All I want to say is, did I expect this to do this? No, I didn't expect it to do it, but nevertheless, I still found it extremely pleasing that this happened. Okay, it has literally, it's just crazy. You obviously, what you have coming down here is really big bullish divergences. So you do have like a confluence of reasons of why this has taken off like it has. I think I wrote this on the chart. Yeah. So one more drop down. You obviously drop down to -2.5. Okay. You've got the bullish divergences. So obviously if you load up some indicators, you've got bullish divergences and you are also oversold. So you've got not just the 0.25 here itself, -0.25, but you're also seeing a confluence of factors of why human traders now might start to see value in this. Okay, you've just gone in a matter of 2 weeks from 920 sats all the way down to 720 sats. So you're seeing a big decline in price. You're seeing, oversold levels, bullish divergences. If you add in some of my levels that I give, then you'll see it's coming down to big support levels. You just got a confluence of reasons for people to find value here, and then obviously that has, this was again earlier today, and it carried on even higher from here. Obviously coming up, taking the highs before, classical crypto, in my opinion, take the high, okay, and then drop it back down. Okay, so yeah, that's typical crypto. And I also really like this channel. Okay, so another reason. Okay, so let me show you this, because let try and answer yourself first. So as you can see here, I started the fib from this high down to this low. Okay, from this high down to this low. Why haven't I taken it from this high? Try and think about this yourself first, and then I'll tell you why. Why have I not taken my fib from this high? Why did I go from here? So try and think about this, and then I'll take this question. Yes, I've got some more examples, and then we'll do some examples at the end, Nelson. That's absolutely fine. But yeah, firstly, let's think. Why have I not taken this high? Why have I selected here? Okay, and now I'll tell you. Because of the channel. This channel for me is firstly, well, there's two reasons. Firstly, what you want to do is when you are back testing, okay, so let's say for example we come onto this coin and it's sat around here. Okay, let's say we're sat around here, okay, because we're not going to be getting in at the very start of any move. Okay, what we could do is when move to this high pivot, okay, is the respect as good? Okay, so you want to go from the pivot. You want to try and work out yourself which pivots are the bots working from and use those pivots. Okay, so if you select this pivot high and you see it's not got as well respect as this pivot high, well, you obviously want to go from the pivots which it's constantly bouncing from. Okay, so that's point number one. And point number two, a little bit of a personal touch for myself, is because this is the pivot high. Okay, this is the pivot high that you get a channel from. As you can see, I've got this channel going on here, okay, with the touches of the lows and the highs as highlighted. High, 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 low, 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 low. So you're seeing a good 7 touches, okay? On top of that, you also have the lovely midpoint that's also a support and resistance level. So in my opinion, this channel is absolutely beautiful. So that's why I'm also selecting this pivot high. If I was to select let's put on another, let's just delete a second. If I was to select the other pivot high of here, well, this channel doesn't really, you can't get a working channel in here unless you go from the low, but I wouldn't do that. So, trying to select a channel, in my opinion, it's not as good. It's not as good working from this high when I'm referring to channels. This one has the respect. This is the one that was containing the move for a few weeks of the highs, of the highs, of the highs, of the lows, of the lows, of the lows, of the lows, of the lows. Okay, this is the channel with the respect. So that's another reason of why I'm selecting this pivot high while working from the fibs. And let me just show you something a second. Even if we didn't have the fibs and we were only working from a channel, we would have still bought this low. Okay, so so this is my absolute love for parallel channels. You would have traded this pretty well, arguably. Obviously, we don't want to use it on its own. We do want to add in other tools, but arguably on its own, it was still a very you could have done some good trades in here. I think let's just think if we were trading this from a channel itself, maybe we would have bought this low, taken profits at the midpoint, or arguably closed out the trade, never got, let's just say this was a minor win. Okay, next touch, let's say we take, well, I guess if you buy the low of the channel, you probably would have got another win. Let's just say a minor win. Well, let's just say loss. Okay, let's say we got a minor win and a loss. And then the third time you take the trade, you get an outstanding win. Okay, so from just trading the channel itself, you would have got minor win, loss, very good win. So that's just something to remember as well. Channels are very powerful. But yeah, this adding in the Fibonacci levels, then you can start to see the confluences that it's been having and workings that it's been going on. Really is amazing for myself anyway. I hope that you are all as impressed as like I was. Yeah, and so this is some more examples. Again, these are all like live examples, so a before and after picture. So again, this is now icon. Okay, so from icon, low to high, okay. This one is not as perfect as waves. I just want to note that this is not as perfect as waves. Okay, but nevertheless we can see some support and resistances that are coming off of these levels. Okay, all I want to say here is this is a really difficult one for me. Is this holding as support? Is this holding as resistance? Are we getting an SR flip here? Because it's just price action through the level. It's not. I would say this is an example that I've added in for one of the levels that it comes down to, but it's not clean trading. Okay, waves is really clean, pretty easy. This one is not so easy, just for a disclaimer. But what actually happens on this was the before, and it did get the drop. Okay, so it did get the drop, and it's the drop that it came down to the expansion of the one. And this is why I said you can add in your levels instead of going all the negative numbers. Adding in like the 1.5 to 2 can also be helpful, because here you can see from low to high to low to high, again dropping straight down through levels onto the 1.5. okay, and if you traded it just from 1 to 5 to 1, obviously in the 8 you could have got a little bit more profits, but generally I'm trading this 1 to 0.5, between the levels instead of expecting it to go up higher. But this is something that I'm still testing myself of the best way to do this. But nevertheless, let's say in like 2-3 months time I can do a part 2 of this, of given it 3 months is not a lot to test something, in my opinion. But yeah, I can do a part 2 of this. But nevertheless, what we can see, I've been doing from 1 to 1.5, like really conservative. Okay, but is could I get more profits by trying to aim for higher levels or changing the way of taking profits? Arguably yes, but again I'll have to wait for more data. 3 months is not enough of data. But yeah, from 1.5 in the end to 0.5, again to 1.5, and then again hovering around the 0.5, and this icon is currently where it is right now, actually even live. So another example here, this is basic attention token, again from the high down to the low here. This for me was a really perfect example, because you can see, so I've selected pivot high and pivot low, high to low, 0.5 to the exact sat. Okay, so we're seeing here 0.5 to the exact sat. This gets us thinking, high, low, 0.5, where does it drop down to? Drops down to the 0.5, again pretty much to the exact sat. Okay, it's not the exact sat, but it's very close. So we can start to see very evident signs of a bot working on this coin, in my humble opinion. High to low, 0.5 to the 0.5. okay, in the end it goes through the 0, but if you trade this long to here, you're not complaining because you made profits, but you could have got more obviously, but nevertheless from low it does come back up to the 0.5, the 0.5 again, and an exact touch of the 0.5 back up to the 1, coming down to the negative 1, back up to the 0.5, to the 0, the negative 1.5, back up to the 1. Okay, so that is 1, 2, 3, 4, 5, 6. Then you come back down, partial decline, sorry, So it becomes a little less perfect here, but then nevertheless from the -1 to the 0.5 to the 0.5 to the 0, okay, coming down to the -1 to the -5, and again coming down to the -1. I would say in this, for example, it's been tested a lot of times. We would expect a break to the downside. I've got a few more examples here, but this is another. Oh, so this is the after photo. Sorry, I actually can't remember this. Okay, so this looks like it broke up actually. Okay. Oh no, actually no, that was BAT. Sorry, I'm confusing myself. This is a before and after on BAT. Oh yeah, so this was what I was going through. Sorry, yeah, I do so much trading, sometimes I forget actually what happened myself, but this was the before and after on BAT. So yeah, this actually did break to the downside. So we can see it was touching this support a lot, and this is the after where it broke through. Okay, so again, holding the support a lot here, a lot of bounces, and it smashes straight through the support, and you can see, must have accidentally skipped past that slide, but you can see it, a lot of build up of touches, smashes straight back through. Perfection, look where it bounced off of, to the exact sat again, to the exact sat of the -2.5. This is not a random occurrence. In my opinion, this is totally not random. You are going from -2.5 up to the 2, 1.5, 2, 1.5, now it's getting a little less clean. Okay, a little less clean. We can start to use some other tools, arguably. But just amazing. It really is amazing that, this is like live taken, and you'd be thinking that this is going to break through. The amount of touches that you're getting on the support, you'd be thinking, well, this support is very weak. Okay, stops are going to be placed here. Stops are going to be placed here. What happens when a lot of stops go off? The move down is pretty rapid, generally. Okay, you do get that rapid move to the downside. You actually come all the way down to the -2.5. A lot of stops built up here. You build up and you come down, hitting it to the sat for the bounce. I just find it very interesting. And another last example that I have here is on link. Okay, from high down to low. So pivot high, pivot low, high to the low, coming up to the 0.5. Again, you're talking very, very accurate. Accurate. Well, bad pronunciation, apologies. Negative 0.5 up to the 0. Okay, so again, you're just seeing the 0 to the 0.5, negative 0.5 to the 0, and again, this is the before, this is the after picture. So high down to the low, to the 0.5, to the -1, to the high, to a series of partial decline, and then again coming up to the 0.5, the 1, the negative, the 0.5 to the 1, and this is like similar to how I was trading it yesterday. So remember, yesterday. So remember, this was my entry. I was going off of, the monthly. So you had the monthly here, okay, and obviously the 382 where I got front run by a sat was here. But now you can start to see how, I really shouldn't have gone all in one order. But I'm going to stop going on about that. But nevertheless, there was a lot of support for the bounce here. Okay, when we have knowledge that the the bot is also working here. We had the bot, we had the monthly, we had the -618, we had the 382 level. So much confluence. You would buy it, wouldn't you? And obviously, it did do that rise in the end. And it, for me, it come up higher here, and as you all know, it hit the high of the monthly before retracing. And this is like, when you're using these charts, I would 100% still have all of my main levels on daily, monthly, weekly, etc. Still use standard fibs. But when you can start to see a coin moving like this, it's really, really powerful. Found it very, very interesting. So does anybody have any questions? Do you pull the fib when prices got into all-time low and highs? I'll go through the questions in order, actually. That would make more sense. Because that is where the impulse started. Yes, Igor, very, very correct. That is one of the reasons where we go from fibs. I've got a little section coming up, but yeah, that's brilliant. Because that's where the drop start. Oh, I must have asked a question. Sorry, I must have asked a question, and I forgot to read the question. Yeah, that must be when I was saying why have I pulled it from here. So yeah, well done for both of you. You both got that right. Sorry, I forgot to check earlier when I asked. It's really good that you are pausing and having asked us questions to ourselves. Helps validate if we are learning much. Yeah, I think. Yeah, that is a pretty good. You have to remember that as well. Like, although I've been trading, it's coming up 10 years now. Although I've been trading a long time, I've not been a mentor or a teacher for so long. So obviously I've been doing this now, the teaching side of things, 2.5 years. So I'm relatively new to this, 2.5 ish years. So I'm still myself. I would still class myself as a pretty new teacher, I guess. Always learning, always trying to improve. But yeah, I agree. Like when I pause and ask questions, it gets you thinking, make sure you're actually engaged with what I'm saying, because I know that sometimes when I do a stream that's 2.5 hours long, let's say, you can switch off. So if I'm trying to engage with you, trying to keep you really engaged with what I'm doing here, asking questions in that sense is good. And it also, if you can't answer the question, then you need to rewatch the video, you need to rewatch some of my past content. Yeah, I understand how asking the questions is good. Why do you think waves retraced in a single move back from the high? Okay, so why do I think this pump? I mean, I was not at anything to do with this pump, so I cannot give 100% answer. But I guess it's kind of a mixture of supply and demand. You have to think that this coin. So this is my educated sort of guess of why the pump was so rapid. Okay, kind of just the confluences of you are coming down major sell-off. So you've seen a really big sell-off. Okay, you're getting a confluences of reasons. You're coming down to major, say monthly supports. You're coming monthly supports on top of oversold, on top of bullish divergences, on top of like fib extensions. You're going to be seeing like possible harmonics going on in here. A lot of reasons to buy. And when you get a lot of reasons to buy, you have to think that there's a lot of demand. Well, who's interested in selling after something has just dropped a lot in like 2 weeks? Who's selling at these prices? So just think, when Bitcoin rose from 7,400 to 10,500 in a matter of hours, why did it rise so much? In my opinion, obviously you got a short squeeze. It's involved in there, but you also get the supply and demand. So that you do get a sell-off of an extended sell-off, and who's selling there when it's such a good opportunity to buy? And I think it's similar to this. It's such a good opportunity to buy. Well, the order book is very thin to the upside. This would have taken, you could have done this with 10 BTC. You couldn't if you market buy, you can absolutely shoot through these lower sat coins, and that's why you never market buy when you're a big trader. On these low sat coins, you can't, because you would market buy here and you would send the order book. And so this, one could say this was some fat finger guy. Somebody maybe just accidentally entered 10 Bitcoin and clicked market buy instead of limit order, and it just sends it up, and maybe he lost a lot of money. Who knows? We don't know the 100% the reason why this rose. It could be something as stupid as that. But in my opinion, it's because you've seen a massive sell-off. You start getting to a good area of value. Who wants to sell? Okay, and obviously people want to buy. Not enough sellers. Once you got more sellers, once you got more buyers than there are sellers, you can get a better price, and prices forced up and very very quickly. That would be my educated guess of why that rose so quickly. How would you position stop loss when trading the strategy? Okay, so the way that I would do it myself is like once you've seen the bounce. So I guess some of you have picked up of how I myself have been trading recently. I have been trading very conservative, and this also applies to the targets. I've been going from level to level. Some people are going to buy here and target up here. There's something you can test yourself. I guess I'm giving you the footprint, but then you can, I'm giving you the blueprint, but you can adapt this as you see fit. But what I've been doing conservatively is waiting for the bounce, and once you've had the initial bounce, buy. Okay, so let's say you got this original bounce, buy with stop loss below the low. Okay, so as soon as you get the first bounce, buy, stop loss below the low. Bounce, buy, stop loss below the low. Obviously, if you bought here, buy, stop loss below the low. Obviously, it got a pretty big bounce. But again, here is the low of the touch, buy, stop loss below the low. Again, here, buy, stop loss below the low. Let's go through the icon. So, for instance, this was the first bounce, buy, stop loss below the low. The other example I have here is basic attention token. So you can see here, well, here would have been a loser, wouldn't it? So if you, well, actually, no, because you get out first. So buy, take profit. Okay, then if you do it again, buy, stop loss below the low, well, again, you actually do take profit. So it's a pretty good system. Buy, stop loss below the low, again, another winning trade. Buy, stop loss below the low, another winning trade. Buy, stop loss below the low, another winning trade sort of thing. Let's try and see where there would have been a loser. If we bought here, another winner. Buy here. But this would have been a loser, let's say, because if we bought this low, although let's say we're going on the exact sats, buy, you would have gone into profit to lose, because then you obviously took the low. So I would need to show some losing examples. Let's say we bought here, it would have actually been another winner, but here you don't get the bounce, so obviously you never buy. Here, touch, buy, stop loss below the lows, another winner. Come back down, we could have arguably bought, stop loss, another winner. Let's go through the last one that I had here, which was link, touch, buy, stop loss below the lows. It's a winner, I guess. Let's say here we buy again, stop loss below the lows. That's a losing trade, isn't it? So let's say we'd have bought here, would have gone into temporary profits to lose the trade. But then again, after taking that losing trade, buy, stop loss below the low, where you got a winner. You have to think that this loser is going to be much smaller than this big winner. Okay, so it's almost triple the size. And again, buy, stop loss below the low, there's another winner. So I think it's a pretty good strategy myself, but you just don't want to get greedy on it. Okay, so it's very easy to say I'll buy here and I'll aim for this high, but as you can see, if you start getting greedy, it can definitely be counterproductive, and you won't actually make the money. Again on link, if you bought here, stop loss below the low, you'd have hit the target. But if you start aiming for higher targets, this now is arguably going to come down below there. So yeah, that's the way I would do it though. But once you've got the bounce, then buy, instead of placing the order there. But that's because I'm really conservative on altcoins at the moment. For which coin does the 0.5 bot apply? For which coins do you recommend? Okay, so as you may have noticed, some of these altcoins from me are new. So the ones I've been added in recently that I don't really trade, I've been testing this on, is IOTA. The other ones have been Stratis, so Strat, whatever this is called, Strat, Wabi, Waves, and obviously some of the higher market cap coins, as you saw from the examples, were Icon, Basic Attention Token, and Link. But in my opinion, ZRX, Basic Attention Token, and Link are like three of the most Fibonacci driven coins, period. They are so driven by fibs. Yeah. Where would you pull the fib to? Obviously from pivot high. Sorry if I'm late. I'm going to go through some examples to highlight where to do that. Do you pull the fib when prices got into all-time high, all-time lows? Let's say, for example, this was an all-time low. Let's say this is all-time low. The way that I do targets for all-time lows is from this low up to this high, okay? And I would put on my expansion. And you can see here, we'd be aiming for these sort of expansion Fibonacci levels. So I use different methods. So that's from the last low. So for the last major all-time low to the high of whatever bounce you get, then that's how I would look for targets on, in an all-time low scenario, same in all-time high. That's how I would do this, and you could be interested in buying at these regions. So a slightly different method for all-time lows and all-time highs. Many commonly traded coins use a liquidity provider like AlgoZ to fill the order books. Yeah, pass. If I'm honest, I'm not a big algo bot guy. That's not how I make my money. But I am becoming very interested in it. But yeah, I know obviously I'm not ignorant to the fact that bots trade. But waves pull from 9th of October low to was the 0.5. 9th of October low. Oh, right. So this was the... I'm not sure which 9th of October low you're on about. No, I'm not sure. Sorry. Maybe bot went mental and bought the 0 level. Yeah, that bounce is obviously pretty crazy. But yes, I can't say 100% why the rise was so big. But if I don't know something, I'll be very open and say, but it's very hard for me to give an answer to you of why, with certainty why this rose. I really can't say, but obviously it happened. Do you need to buy every level? As with everything that I teach, I would even try and use this in confluence with another tool. So for example, we would be marking out our other levels. So let's say we're on the daily chart. We would start marking out other levels, using this as in confluence with other tools, not just exclusively using this on its own. I would not recommend that, as I don't recommend to use any tool on its own. But if you start using this in conjunction with other tools that I've taught thus far, I think you can have a good strategy. So the question of do you buy every single level? I want to say you can buy every single level, but you will have a higher probability of success if you only buy the levels which have something else with confluence. Okay. Again, this hard for me to give a really good answer because I'm still relatively new to this myself, but I would say you want to use it in confluence with something else. So for an example, when we see this 1 lining up with the bottom of the channel, that's a good trade. Okay, again here, the low of -2 of the low of the channel, that's a good trade, like a really good trade sort of thing. Again, -2.5 with low of the channel, that's a really good trade, isn't it? So it's like when you start to see these confluences, well, you would say, okay, if I'm buying the -1, I'm trading it to the 0.5. But if we've confluence of the channel, maybe you might say I'm holding on to this longer and I'll aim for the top of the channel, and e.g. that would be a two deviations, wouldn't it? And let's say that's 1 deviation aiming for 2. Here you would have got take profit 1, stopped out. Here though, you would have bought and then got the full sell, because you would have literally went from low to the deviations. And on this example, obviously the low again, well, you would have done a good trade with 2 deviations. In the end, you could have done more than that, let's say. But maybe if you see the confluence, you can start doing bigger targets. I will 100% do a part 2 on this, because I'm still going to be using this over the next few months for more vigorous testing, because you have to think I'm doing this in kind of my spare time. When I'm actually day trading, I'm primarily using my own strategies, not so much this, if I'm completely honest with you. But nevertheless, this has been interesting for me as a part-time, and I wanted to bring it to you tonight because I think it will, and many of you will find it interesting as well. I hope. So that's one way though. So to reiterate of answering the question of do you buy every level, yes, you can buy every level and trade it like that, but I would always try and search for a confluence, okay, of are you getting another factor line up on that level, rather than just exclusively trading on its own. But again, that's me myself. I like to see confluence. And that's because the reason why I like to see confluence is because this is a game of probabilities. One factor on its own is not high probability trade. If you can start to get 2, 3, 4 factors, well, you suddenly have gone from a low probability trade to a very high probability trade. But let's think to poker. Okay, so arguably poker is very similar to trading in some regards in terms of risk management, and it's a game of probabilities. You can have 10 confluences together, which let's say that's pocket aces. If you have pocket aces, you're not guaranteed to win. Somebody can get a better hand once the river's out, and just because you have pocket aces, that's the equivalent of 10 confluences. You can still lose, just as you can have a 2 and a 7, okay, and you could have one of the worst hands, okay, but you can still win your trade. You can still win your hand if you get very, very lucky. You might get another 2 and another 7 come up, and your pocket of 2 and a 7, you've just got another 2 and a 7 come up, and you've won the round. You've brought in the money. So that's pretty similar in that regards. Pocket aces doesn't mean you're going to win. 10 confluences don't mean you're going to win. The one confluence with the worst hand could win if they get lucky, but we're talking about consistently over time. You're going to be winning more money if you consistently have pocket aces every hand, rather than 2 and 7. The probabilities, you're more likely to win with pocket aces. You're more likely to win with 3 confluences together, if that's a good example. You always want to search for the highest probability trades where you're more likely to win, because that's what we want: consistency over time. We're not in this game to win once big, because the people that obviously I receive a lot of messages from people who have in this game won very big to give everything back. Is that the type of trader you want to be? Absolutely, it's not, is it? You want to be getting this consistency over time. You want to celebrate your wins, taking profits, not having a win, feeling good, and the next day losing it all. That's not what you want. You also just don't want to be taking random trades. Yeah. Digressing. A fib expansion, negative fibs. Yeah. What time would be better to use this? Well, for example, a lot of the examples that I've given are from the 1 hour chart. So, I find this very nice on the 1 hour. If I'm honest, 1 hour chart, 1 hour / 15-minute chart. Those for me are the what I've been primarily using it on. Okay, so 15 1 hour charts, stretching to 4 hour, but best on the smaller term time frames. 15-minute 1 hour is ideal because you have to remember we're trading the low sat coins which bots participate in. So day trading time frames, 1 hour, 15-minute. You're going to see them are going to be the most success on. Okay, and that is done for the questions. So yeah, next section that I want to move on to. I just need to take a drink. I'm losing my voice a little bit. Oh, okay. Of selecting the pivots to pull from. Yeah, selecting the pivots to pull from, and this is a section that I want to go over today. I'm debating whether I put this over onto next week. I am debating because I kind of want to cover Bitcoin as well. What was I going to do next week? I guess I could do. Sorry, I'm just thinking in my head of whether this would make more sense rather than overloading with information. Whether it makes more sense to do this next week when I was going to do GAN. Yes, I will save this section till next week. I'm going to save that till next week. I've made a decision. I'm going to save that section till next week. So I'll cover that next week. I want to cover Bitcoin for you all, where I can easily be speaking about this for another 20 minutes because there's just so much going on in this chart right now. Well, firstly, if anyone has, I want to go over some examples. Okay, so a few reasons. First, I want to go over some examples. Okay, where I am going to be in a little bit showing you which pivots to pull from. Saving that section till next week of the tips there, but that's not to worry too much. But yeah, I want to go over some examples of some low sat coins, and then I want to go over in depth on Bitcoin for you all because I feel we're reaching just such a pivotal area. So let's go through a random coin. If somebody wants to give me a low sat coin, and then that way I've never ever looked at it before, so I think a good idea, let's just go on to Binance and pick one of the low sat coins. That way we have zero bias, and I will just go on one of the random coins that I haven't looked at. So let's do this by let's say it has to be volume has to be over 100, but still relatively low sat. Okay, so let's do the closest one, which is currently ARNBTC. So I have, totally honest, never looked at this in my life, but ARNBTC. Let's see what it's like, shall we? So ARNBTC. Let's just go and stay on the 1 hour chart. Well, actually, it doesn't look like this is too great of an example. Some of these coins, because you see it's just like pump and dump. Nevertheless, let's see what we've got going on here, shall we? Let's see if we can work out and see if this would have been helpful or not. Okay, so we're always going to start first. Okay, I'll be going from this pivot high to this pivot low. Okay, so firstly, just from the high, let's change this on to the 0.5. Okay, from the high down to the low. Okay, wow. Actually, it does look pretty nice. So so from the high down to the low, we actually do see the reaction at the 0.5 really nicely. This was totally not planned. I've honestly, God's truth, never looked at this, but it looks like it's respected. But yeah, from the high down to the low, we can see the reaction actually at the 0.5. Where does it come down to? Ultimately, you seem to get another few bounces at the lows, 1 touch, 2 touch, 3 touch through, and then at the 0.5, this is where we're getting the reactions, isn't it? So that is pretty nice. So I would say here you've gone from here to here, and what could we do? Buy here, for example. We could buy here, stop loss below the low. You haven't got stopped out here, so you haven't got stopped out because this wick down never took the low. Let's just see how this would have traded. Oh right, so it's still where you are now. Okay, so it's not really led to anything much, but nevertheless, yeah, we can see from the high down to the low, you could still be in this trade now, and that is 30%. Yeah, that's pretty cool. But yeah, let's see if there's anything on the lower term time frames. Let's try and do it to the downside. This looks so ugly price action, but from the high down to the low, well, you can see there's you're clearly through here, long low, which this is not really too helpful, I wouldn't say, on this lower term time frame on this coin. Let's see if you got a little bit better here, where it was not so massive pump and dumps. Okay, from the low up to the high, not really too helpful there either, arguably. Let's yeah, that doesn't look like it's going to be arguably too amazing. Let's just try one more pivot. So from the low here up to the high, yeah, you see it goes through. It's not too well respected on this. Let's try and do one more example, and I'll do the one below it. So that is don't want to do these because they're margin coins. So that let's just do it. So what is this dash? To be totally unbiased, dash BTC. Let's see on this one. Okay, so this is currently heading downwards. So let's start from the start of this downtrend and see how it went. So I would, well, firstly, can you tell what pivots I would select here? I hope that you can tell which pivots I would select. We're looking for downwards moves. Okay, so think a bit for this for 1 second. Okay, so I would select very simply the high to the low here. Okay, simply always first I'd go from the high to the low and see the respect of those pivots. Okay, so this looks like we might have a winner. Dash looks pretty nice. It does look pretty nice, actually. Let's just zoom out all the way. I don't know, it looks all right. So what we can see, high to low, the 0.5 to the touch. Okay, it's not amazing actually. You can see here, you would have got a bounce, you would have bought. That's a losing trade, isn't it? Bought here, stopped below the low, a losing trade there. Okay, here you don't get a bounce, so I wouldn't have taken the trade, because remember, we're waiting for the bounce, buy stop loss below the low. That's clearly no bounce, so there's been no respect on that one. This doesn't look like, so I would say, so my answer would be that this algo isn't participating in this coin really, because although you got the first touch here, that's just a standard 0.5 fib, isn't it? And then none of the bounces have really gone off well for this. So I would say you could use like a better option on this. Okay, well, I guess another theory that we could do is use different pivots. Okay, so this is the thing. We can see that there was no respect from this high to this low, but it could be that they're working with different pivots. So that is something that you have to take into consideration. So before giving up on this totally, we can try different pivots. So instead of this high, I'm going to stick with the high, but instead of going to this low, let's drop it down a pivot and see if we get any better respect. Okay, from high to low, don't reach the 0.5, and no, it's no better on that pivot. But let's start it from this pivot, high to low, 0.5. I guess it's hard because the bounces, there's not really been any bounces until you got to the low, but it doesn't really look like it's being respected there either, if I'm honest with you. Okay, and that's why you want to like test this before you just go randomly trading any random altcoin. And I'll do one more, and I will pick this one, MTL. We'll just see. Yeah, MTL. How is it, MTL? Again, I've never traded this, but let's just see what it's like. So yeah, it's pretty hard. Let's think of an area where it would be good to start. Okay, so let's start from this high to this low. Okay, from this high to this low, let's see what it's like. I think it looks pretty, it looks okay, but not amazing. High to low to the 0.5. So this has got us started. From the low, we would have bought here and lost, got that losing trade. would we take it again? You know, we can take it again when we see that this actually starts making higher lows. Okay, so you see there the series of higher low, higher low, higher low, higher low. Like there's no reason not to take that. So even if you, so let's just say it starts off to the high. Okay, let's say we shorted that down to the low. So actually, let's not get into shorting. So let's just say we didn't participate in this downwards move. From here, we took a trade. We took our first trade here and lost when we got stopped out. We then take it again from here once it forms a higher low and stops below this low. Okay, so second trade taken is a winner, isn't it? So there's one loser, one winner. Comes back down to the low, lots of wicks onto the level, still forming higher lows. We can take this again. Another second trade taken, you know, and a winning trade. Okay, what we could even do, no, I was going to start going into the two deviations. Let's just keep it a bit more simple. So yeah, we trade it up to the one, and we close out the trade, and that's another winning trade. Let's say we take it from the one as we see the back test. Well, let's do it. You know, just because we close out here doesn't mean we can't enter again at the same place. Take it again here and win the trade. Okay, you then get a drop down into the level. Let's say, to keep it consistent, we bought in again here to trade it up to the 0.5, stop below the low, and we clearly then lose a trade. So we're coming out at more or less break even here, aren't we? Take another trade off the 0.5 here. Let's say we took this long, stop below the low, and then it's a winning trade. Okay, and we do it again. Buy here, stop below the low, another winning trade. We come down, buy here, stop below the low, losing trade. Okay, so I would say we're coming out more or less break even again. Okay, again here, buy, stop below the low, a winning trade. Don't quite hit it here. Actually, this is arguable. Wouldn't say let's just say we wouldn't have traded this one. There's not enough of a close touch. So we've come out more or less break even. Let's say I wasn't actually writing it down, but let's say there was 5 winners and 5 losers. But what you have to acknowledge is that the losers each time are going to be smaller than the winners. Okay, so our losers each time, so where was like a loser? So here was a loser. So let's say we got that bounce and we bought in around here and stopped below the low. Your losers are 0.47, but when you got the winner from the same entry point, let's say, to the high, you know, you're winning 2.5. So your gains are 2.5% and your losses are 0.5%. Clearly, with a 50% win rate, you would be making money. Just think of it like that. I cannot say you're going to make money with this strategy. And I need to do this for financial advice. This is purely for educational purposes, and past performance obviously doesn't mean that it's going to continue into the future. All that legal kind of stuff. Please read this. But yeah, nevertheless, it's pretty interesting. But yeah, you have to remember that if you are good with risk management, then your losers should be smaller than your winners. Yeah, so there was a few examples. Yeah, with the pivot stuff, I'm going to cover that next week. Let's go through Bitcoin. And if anyone has any other questions, please ask. Could you please give a breakdown of when you approach a level? For example, today in Bitcoin, when we were bouncing back to the 7,200 level, and you said you would wait for a reaction. How does that play out? From your perspective, do you drop to lower time frame for market structure break? Then when market structure breaks down, comes up in much daily trades. Long message, I know. Trying to explain what I think I understand what you mean. So the question is good, by the way. The question is good. The question is, let's say for an example, I have seen a coin move up. Okay, let's just use this example, and let's say there's confluences at the 382 fib, and I say I'm looking to buy the 382 fib, but I want to see the reaction first. What does that mean? It means I'm not placing an order in the book, because it could just do that. Okay, so what am I doing? I'm waiting for the reaction first. So what does that mean? Okay, it means I'd want to see this come into the level and bounce. Okay, once it's got the bounce, I'd want to see a higher low and then take the high. Because what that's done is I've seen the level hold. That for me is seeing the level hold. I can have my stop loss below the low. Because then once we've gone the high from the bounce, lower high, higher low, that is one stop. That's one higher low, 2 higher lows back. This is my stop loss. This is my invalidation, and I trade it to the high. What you have to think is, if you had knife cat, if you had knife caught and had an order in the book, you would have got more profit, because instead of buying here, I'm buying higher up. But I want to say the probabilities are in my favor. I also have a very clear invalidation level, whereas if you are knife catching, okay, if you are knife catching this level, let's say your stop loss is down here, because there's your invalidation. By having more profit, because you're buying at a lower level if you knife catch, I'm always going to be buying higher. But the pro of knife catching is higher reward, but you're also taking a much higher risk if you're wrong. Whereas for me, I'm taking a smaller reward, because let's say I'm still targeting the same as knife catcher, but my risk has dramatically declined. So that's one way that I like to wait for a little bit of confirmation, waiting to actually see a level hold instead of having orders in the book, which I really don't like to do at the moment. I would much prefer to wait for the level to actually show its holding. Sometimes I would be more aggressive, so let's say it just does this and gets the bounce, I might market buy it in straight away, and that for me very much depends on the volume that comes in on the level. Okay, if we actually come down here and there's a hell of a lot of volume comes in, then I might not wait for the higher low and higher high. I might just get in, drop down, see the bounce, but then market buy in straight away with the stops below the low. And that way, if it does a V-shaped recovery, I'm in on the trade. So those are the two ways that I would approach this. Sometimes, I don't care buying at market. Literally, I'm a trader that doesn't care buying at market, because I think, yeah, obviously I'm paying more fees, but I'd prefer to be in on the trade. And yeah, so I don't care buying at market. I know some people don't do it, but I will buy at market if there's a proper reason to buy at market. And then if you see a bounce that starts coming some really good volume, let's say that this was a previous low. Okay, we swing failure pattern the low and get the bounce with high volume. Well, that for me would be a buy at market, because I want to trade it up like that. Okay, so yeah, I hope that has helped, Chris. Those are the two scenarios that I'd be generally looking for: the bounce, higher low, higher high, higher low, and that's either going to be on the. For me, there's 3 time frames that I base this off of when day trading scalping. It's either going to be the 3-minute chart, the 5-minute chart, or the 15-minute chart. Obviously, the higher the time frame, the more conservative the entry, because this could be on the 3-minute chart. You could have had a low, high, higher, low, high, and on the 15-minute chart, it's still printing the first candle. So that's the terms of aggressiveness. Sometimes I'll be really aggressive if I am feeling this confident in the level, and then I'll be on the 3-minute time frame, higher, high, higher, high, higher, low, higher, high. Whereas sometimes I'm going to wait for a 15-minute higher, high, higher, low, higher, high. Really context dependent. It really does depend on the context. But yeah, what time frame are you looking for? I hope that's answered. There was actually someone's just asked what would be the time frames. Yeah, I'm across those 3 time frames for all trading. When I'm actually scalp trading, my main time frame is the 3-minute chart. So I do love to trade the 3-minute chart. But 3-minute, 5-minute, 15-minute, those are my main time frames to trade. No worries at all, Chris. I'm very glad that helped you. So yeah, now my perspective on Bitcoin. So I would like to cover this. A few things to bear in mind when I go through my analysis now. Okay, the few things to bear in mind are I am already in a short position, and my short position was opened obviously nearer the highs. So my position and the way I am managing my trade is going to be different than yours, because I have been taking profits on the way down. I've added on the way on the highs, so I have already 100% got profits in my bank from realize this is let's just drop down. This is not, well, no one I know here takes it as bragging, but the way that I trade is taking profits, okay, compounding back on, taking profits, compounding, the way it works. But I have got realized profits. My entry is obviously higher up as well. So that's just to bear in mind when I go through this analysis, okay? Okay, so with that said, I am expecting a drop down, okay? So I am still expecting this to come down. For me, the really, really, really key level, so let me add on. For me, I'm thinking a very key level is 7,315. Why that? Because it is the point of control of this range that we've been in. So this is where the POC, point of control, the most volume that's gone into this range is this level. Thus now it should be a strong resistance. On top of that, not just because it's the point of the control, but also you can see here support, resistance, 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 support, areas of support, support, resistance, 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 support, support. It's resistance, resistance. So big, isn't it? This 7,350 level. Okay, so 7,350 for me is a very important level. Okay, that while we maintain below that level, I am expecting lower prices. If price does this, it's off of the cards, in my opinion, and I'm expecting a much bigger rally before, maybe back down, but I still would expect the rally before down if we reclaim the point of control, and specifically this region of 7,350. Okay, I have my stop loss above the high of the daily. Okay, 7,000. My stop loss is actually I put it in the books at 7. Well, I don't need to give you an exact figure, but it's above this. It's above this level, okay, of around 7,450x. Okay, so I think it's about 7,460, but that's kind of irrelevant, the exact number. But yeah, my stop loss is higher up. Why now? Why have I got higher stop loss? Because you might think, well, Daniel, does that make sense? If this pumps, you are throwing away a lot of profit. Absolutely, you're correct. I'm not going to say I'd be happy throwing away some of this profit, but at the end of the day, my entry was higher. This is still a stop loss in profit, so that's something to be aware of. That this is a stop loss in profit for me. Although yes, I will throw away a lot of profit, which will be for me very annoying. But I am comfortable having it this high. For me, this is a clear invalidation. If price comes up here, it's clearly invalidated. You might say, Daniel, why? If your invalidation is the 7,300 level, why aren't you placing your stops above these highs? Okay, so let's say, why am I not placing my stop here? Or why am I not placing my stop here? Okay, this is obviously 7,270, 7,370. Clearly, if price gets above here, I'm invalid. Well, very likely to be invalidated. Why have I not got my stop here? Because I just have a feeling that we could see a stop run. Okay, e.g. a long wick to the upside before going down. I myself am willing to take the sacrifice of having my stop loss up here, because I am under the impression that we could see a stop loss and a stop hunt, and this is because the open interest is increasing pretty substantially. You just have to be aware you could get a stop run. So yeah, my basically I am expecting lower prices, but the reason why I have a wide stop loss is because of any stop hunt before we go down again. Yeah, I wanted to make that clear. Firstly, why I got my stop loss. Secondly, why am I expecting lower prices? Well, obviously on the shorter term, we have taken all liquidity to the upside. We were range bound here. Okay, what happens when you swing failure pattern? What you do here, go back and watch the video I did on swing failures if you want. We come up, we took the highs. That's all the liquidity taken to the upside, and then you can sort of expect lower prices, at least to the bottom of the range. Bottom of the range is arguably around 7,081, so we are very much reaching that level. So one has to be aware of this level right here of take profit. Okay, you also have from lows up to the highs the 618 on this region, so you're coming up to a high value. Okay, so one might definitely be taking profits here. But yeah, this is around 7,000. Let's just say 7,100 to 7,900. There's a pretty big support. But if we are ultimately range bound and we're coming to the bottom of the range, that's 6,500. So yeah, I am expecting lower prices as long as price maintains below the point of control, 7,320. And yeah, my invalidation is but above the daily, my personal invalidation. Yeah. Daniel, do you always buy on closes? No, not always. So yeah, no, sometimes I'll buy on. I'm not 100% sure of the context you mean of do I always buy on closes. You have to remember the majority of my orders are limit orders. So I'm not sure what you mean on do I buy on closes. Do I wait for the candle closes? I think I understand, and the answer is yes. But I would wait for the candle close on the time frame that I'm trading, because for example, let's say that if we come up to this level and wick above it, that's no good. But if we actually come up and close above here, well, that's my invalidation, and I'd close out on my short early. So I'd close out on my short early instead of waiting to hit stop loss. Well, I'll close out here, for example, and get that little bit of extra. There's no point in just having a stop loss and just saying, oh, I'm just going to wait until it's hit. You want to get out as early as possible, and a wick into this level is obviously good in my opinion. But you come up here and close, that's a different story. I think that's what you mean. How did you add the volume profile? Oh, so this is called fixed range. So this is the fixed range where you just want to get the volume of one certain range, because we're range bound here, so we only want to get the volume of this range. This is called fixed range. You have to have TradingView Premium, but yeah. TradingView seems to only have a template for the cipher pattern, but they do have yes. So basically what you have to use. Okay, so yeah, you are correct. Where do they have it on here? Yeah, here. So they do obviously have the cipher, but for when you are trading the bat, the shark, the Gartley patterns, the butterfly patterns, the bat, etc., you want to use this XABCD pattern. Okay, so you can see here where I've got these shark harmonics. This is taken using the tool. They call it on TradingView XABCD pattern. Obviously, the cipher pattern is used in a different tool, but for the actual other harmonics, all the rest of them just use the XABCD. But I'm going to do another stream on harmonics because I don't feel people appreciate them enough, or I don't see people using them enough. So I think it's worthwhile doing another stream. It doesn't hurt to go over them because they are so powerful. I mean, this was the best one, wasn't it? This harmonic allowed me to short this and take profits. I just want to really highlight this because this was amazing. It was amazing. I posted this harmonic when it was like this, okay? Or when I just had the X, the A, and the B. And my exact comments was, if this goes down to 7,400 and then pumps, then I'm going to retire. That was my exact words. Obviously a bit of a joke. But the way that it happened was absolutely outstanding, absolutely amazing. And this is not about the money. For me, this is like just amazing. That actually, after posting this harmonic, it came down to 7,400 and it pumped to complete a cipher pattern. So e.g., I was short here. I took profits here. I was longing here. And obviously in the end, I ended up closing out the majority of my position at 9,000. But nevertheless, from the lows to 9,000 is 23%. And when you have a lot of Bitcoin, that's obviously a lot of money. But, we can obviously appreciate like what happened here. I don't need to go through all this, but obviously hit the 618 and down again. But, harmonics are absolutely amazing. It managed to really, 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 really help me trade that. So I want to cover harmonics again. I want to give them some love. As in the middle of the chart, as mine only shows on the left or right. I think you're still asking about that. So yeah, you use fixed range, okay? And then if you want to see my options, this is what I put in. XABCD for, yeah, that's exactly what you need to do, man. Cool. So if nobody has any other questions about what I've covered tonight, I will call it a night. My throat is feeling it a little bit. I'm not going to lie. So yeah, I'll stay for a few minutes if people have any questions. Oh no, I need to cover. I do need to cover something, the video, and I nearly forgot about this. Apologies. So yeah, what I wanted to say here, it's really, really unfortunate. It's really, really unfortunate the reasoning of why I've had, if you remember, it's not just me and the company, by the way. So I do have a business partner, and we do obviously have like employees. So it's like a team decision. It's not just something that I control. I do have to like run it past people, although I'm obviously like the face of the business, I guess. But we have taken the decision as a business. The unfortunate decision, I want to say, because it's not, I didn't want to do this, if I'm honest with you all. But let me explain some of the reasons. So there are a mixture of reasons, really. We have gone all the videos on the website. I hope for the end user there's not going to be much difference, but you will notice that the videos are hosted on Vimeo. The reasonings for this is because people have join the mentorship. And people have been downloading all of the videos, and then selling them on. And for me, it's just very frustrating when I put in so much time and effort into making it, to know somebody is just making money off of my work. For me, that's really annoying, actually. Even though, it's not about the money. It's the fact that somebody is making money from my work. That is really, really annoying, actually. So that's one of the main reasons. People, unfortunate, scammy people that live in this world, stealing the content and then selling it on for their own gains is really annoying. Also, the people that have people will steal content and upload it to piracy websites. It's just really annoying. And then people then have to waste time asking them to take it down, and it's just a process. It's just annoying. So this is some of the reasons. We also have people that join, take all the videos, and it's just really, really annoying. So that was one of the main reasons. Just unfortunate that this sort of thing happens. So yeah, we have made the decision as a business to move it over to Vimeo. Obviously, Vimeo is a paid-for service as well, so this is an expense that I wouldn't have on YouTube, but that's neither here or there. But I want to explain how to use Vimeo. Now we have moved away from YouTube to host the videos. It's very, very similar. I really hope you don't notice too much difference. And if there are sort of suggestions or feedback, then we can find something else. We're not set in stone on Vimeo, by the way. But let me just explain how you use this. As you will notice, it looks very, very similar. You got to click play. When you click play off of the website, you'll see that there's no volume controls, etc. Very simple. You need to go into full screen. Once you're in full screen, that's where you'll be able to change it to 1080p quality. That's where you'll be able to go into and adjust the speed. You just need to go into full screen to get those controls. Obviously, you've got the volume, you got the speed, and you got the everything here that you need to adjust. One thing that I will note for you all is that if you are on, like iPhone or just a phone in general, what you will want to do, that I have noticed, is if you just go onto your phone and try and watch a video, you won't have the option of the when you're in full screen, you won't have the option of the volume and the speed and the quality. So what you need to do is you need to put your phone into landscape mode, okay? And when you go into landscape mode, don't go into full screen. So this is slightly confusing. So when you're on the list like you are here, go into landscape mode, go over to the video, and then you will see the volume controls, okay, and the speed controls in portrait mode. So go into portrait mode, change the speed if you want to change the speed, and then go into full screen, and it will be fine. It's just a little bit of a weird thing on Vimeo. I have no idea why that happens, but apart from that, it should be exactly the same. Okay. Yeah, obviously we've been receiving some pretty bad things recently. I guess it's important to make you aware of the things that have been happening, but obviously shout out for all the support, but these are some of the things that have been happening. Obviously, this was reported by a lot of members that obviously the website has been down recently. So some people have been trying to go onto the website and it will come up saying the website's down. Obviously, for some crazy reason, I have no idea, but obviously we've been having denial of service attacks. So basically people, your information's fine, don't worry about that, but people just overload you with traffic. So they will send a lot of traffic to your website, and then the website is inaccessible. So we've had that going on recently. We've had people impersonating me, or pretending to be myself, and this is the guy. So this is pretty funny. Obviously, this isn't me replying to this guy, but we've got people that pretending to be me. You see how there's a little spelling mistake. This guy wants to join the group, and then this guy's saying DM me, and the guy DMs him, and then people have lost money on this. People have sent this guy money because he pretends to be me, and then he has a fake email address that is like chart champions, really, really bad. But people are, you got people like this in the world. So we got people firstly just downloading my content, selling it on. We got people impersonating me, and people are sending him money and then getting angry at me when they don't receive the content, when they've sent it to a scammer. So just things like this are obviously just some of the precautions that one has to take, I guess, of why we're having to do this. But yeah, obviously that's a real big shame, but nevertheless it's part of the work, I guess. But yeah, there we go. So just be careful. Just be really, really careful. Obviously, the only people that I would say trust in terms of on the Discord side of things, you can trust obviously myself and my own account. You can also trust like customer service. This is verified. Just make sure it's the actual customer service. Obviously, their tag ends in 5804. Just this is an absolute fine account to communicate with as well. Also the moderator account. So. You got like 3 accounts, so you just be careful with who you're communicating with, and you'll be absolutely fine. Just a bit of common sense. It's obviously common sense, but there we go. Yeah, obviously that's just that's it. If people are, there's obviously no way I can stop it fully, but we can take these little precautions to at least make it a little bit of hassle for them. But I'm fully aware it's impossible to stop it fully, and at the end of the day, it's going to happen. But obviously we can make it as hard as possible for them. But if yeah, there we go. At the end of the day, it's impossible to stop it all, and I'm not gonna lose sleep over it. But if I can make their stealing at least easy as possible, then I will do that, because I am not happy knowing people steal my content. I put in a lot of work into this, and then to know people steal it, it's annoying. It is. So yeah, that is what I will end with. Yeah, it's annoying. But yeah, we are trying to think of a better way. Like maybe there's a better platform than Vimeo. Like there's nothing set in stone here. If I have to buy another thing, I literally couldn't care less if I have to buy something else. But we are open to suggestions. If you have to remember, I'm not an expert on video sort of things. So if people, if anyone has a suggestion, just write it in the chat, and I'd appreciate that. Because I openly will say I'm not a video editing expert person, so that's not my expertise. So if somebody does have the expertise, and open for suggestions. But yeah, that's how it is for now, and just wanted to give you the reasons and how to use it basically. So yeah, as you will notice, this video will go private in the coming hours, and I will upload this video now to Vimeo, and then I will then in turn well, actually I don't do it, but someone will put it out on the website. So yeah, there we go. I hope that you have thoroughly enjoyed tonight's stream. It's been very useful. I will catch you for next week's stream then, where I think I will do the GAN next week, and then the week after we will do harmonics, and then the week after that we will do Fibonacci time. So that is, yes, 3 streams left in terms of fibs. Next week GAN, and going over how to select the correct pivots, and then we will do harmonics and fib time. Pretty cool. So yeah, that's the agenda. Hope that you have all thoroughly enjoyed this one, and enjoy yourself in the group, I guess, until the next stream. Obviously the champions, I will see you at the weekend. Cheers everybody, and thank you once again on my behalf. I hope you've thoroughly enjoyed, and made lots of notes, lots of stuff to review and visit. So cheers everybody, thank you, and good night. Cheers.